Good afternoon, everyone, and welcome to Stock Market Today. On the show today, we are taking a look at Comcast as well as EPAM, some strong charts there, as well as where financial stocks could be headed. It's Alyssa Quorum here with Justin Nielsen, and let's start things off by taking a look at the major indexes. It was a really strong week for the market. We did finish Friday, though, with modest losses down across the board. The S&P 500, Nasdaq, and Dow down about 0.2% each, but for the weekly gains, it was a big week.
Very strong. We saw the S&P 500 get back to new highs. The Nasdaq doesn't look like it's very far behind. Maybe a 1.7% gain will do it for the Nasdaq. You know, now a lot of that movement, especially for the S&P 500, was due to oil and gold. So there was a lot of strength there. Growth was getting a little bit hit today. So a lot of the software names, a lot of weakness there that kind of was getting masked by the indexes and some of the bigger weightings in the indexes not doing quite as poorly. But we'll see how it goes from here.
Yeah, definitely, because the Nasdaq is now back above 8,000, so that psychological level. But when you take a look back to early May before that last sell-off, and even the prior August, now 8,000 level, that's going to be pretty key to hold above.
Yeah, so just at the edge of the chart here, you can see in August that we got back above 8,000, or actually we got above 8,000 for the very first time. We were not really able to hold that for more than a couple of weeks at a time. Then we had our Q4 correction, 20%, got back to the 8,000 level at the end of April. Only was able to hold that for a couple weeks. So now that we're back above that 8,000 level again, we'll see if we can hold it. That's going to be a key test.
All right. Well, Justin, you mentioned growth stocks not looking too stellar right now, but maybe investors should be looking at some of these bigger mega cap stocks to add to their portfolio, diversify a little bit, because maybe they aren't as prone to some of these fluctuations that we're seeing, and Comcast is setting up nicely.
Yeah. And there's still a lot of growth names that are looking okay. They got a little bit hit today.
Just today.
But we'll see if this is portending to something a little bit more serious. But again, right now things are still holding up pretty well. But it's still not a bad idea to look at some of the bigger cap names. Having all high octane names, all IPOs in your portfolio,
which there's a lot of really interesting IPOs right now.
But that can really kind of lead to sleepless nights. So Comcast here, it's setting up in a nice flat base. Now this is almost a $200 billion market cap company, so this is not small potatoes by any stretch of the imagination. But it still does have a very high composite rating. We were noting before the show that this was a 99 composite rating, so it's not a slouch by any stretch of the imagination. It's got good fundamentals, and the stock price, as you can see, it's right there, forming a nice flat base, and the relative strength line is not too far off its highs, and it's got a very good relative strength rating of 89.
Exactly. Yeah, that composite rating was something that was surprising to me. We've been focusing a lot on those smaller, by comparison, software stocks that are just, it's like 99 everywhere you turn. So, it's always good to take a look, of course, deeper than the surface than that, but high composite ratings, that's usually a good sign.
And just as an example, some of these mega caps that we've had, for example, on Leaderboard, Amazon, MasterCard, they're MasterCard you might not think of as being super sexy, and it's a financial, it's a company that's been around for a long time. What is it that they're doing new? But sometimes you can get very solid gains. Maybe you're not going to be looking for 100% gains, but if you could get a nice 20% gain, a few of those in your portfolio a year, and you're going to do okay.
Yeah, exactly. And another stock that has a 99 composite rating right now is EPAM Systems, and it too is closing in on a buy point here. It's about 4% below a potential entry, and for annual earnings estimates, accelerating growth is something that is seen. 2019 analysts expect 19% bottom line growth, and that picking up to 22% in 2020.
So the thing that I really like about this, and you can see if you kind of match the volume below on the chart with what's going on with the price action, you can see that as this is forming a flat base, there's very little volume. It's well below average as this flat base is forming. And a lot of times that happens. We see that in flat bases. It's almost like investors are taking a wait and see approach. They don't want to do any selling of their positions, but they're not quite ready to do buying yet either. So what you can see is if it has a catalyst that puts this back above those resistance levels right right around 180, then that can really portend for a big move. And the low volume is kind of the calm before the storm.
Yeah, so we would want to see heavy volume
Right.
if that stock breaks out, and maybe this is just being a little nitpicky with that chart here, but even though it's kind of been holding tight lately, that relative strength line has come down a little bit. It's still moving sideways.
Right, and that happens sometimes when you have stocks that are basing while the market is in rally mode. And so sometimes you will get that kind of disparity in your relative strength line because it's not moving along with a lot of the names that have been fueling this rally.
Well, calm before the storm, I think that is a great way to describe it. And let's also take a look at financial stocks, maybe a potential catalyst here for that group with the stress test results coming out. So we want to take a look at an ETF, the Direction Financial Bullish 3 times.
Yes. So this is triple leveraged.
Yeah.
And the reason why we sometimes will play a triple leveraged sector ETF is because it kind of has the movement of a stock, but you get a little bit more diversification amongst names, especially like with the biotechs, where sometimes you don't want to take that individual stock risk, FDA approval or something coming out like that, phase 3 trials. Sometimes you can get a little bit more diversity in that sector by having more names available to you, but you still get that triple leverage that gives you more of the movement of a stock. And so this set up in a nice, pattern here, a cup with handle, and that's something that we have been taking note of. As you mentioned, we have that stress test results coming out. Sometimes that will kind of reflect whether or not some banks are going to be, hitting dividends, increasing dividends, what have you. But the fact that we do have that pattern setting up in the ETF could mean, hey, if this is something that moves, of course, there's still all this news-driven stuff that's going on that could affect things. You've got people still looking at the Treasury yields, and we had this thing with Iran this week, and now next week we've got the G20, where supposedly Trump and China are going to be sitting down and talking a little bit about trade war stuff. So there's a lot of headline risk that's still out there, but you have to be aware of what sectors could potentially be moving.
Exactly, yeah. I think taking a look at these ETFs, it's a great way to figure out how that overall sector is doing. I mean, we've heard for a while that financials, kind of been lagging a little bit, but it looks like they're doing pretty good right now, especially when you compare it to semiconductor stocks and how hard hit those have been lately.
Yeah, and that's where sometimes that relative strength comes into play too. It's the things that didn't get hit as hard that can sometimes rebound a little bit faster and get to new highs faster and be the leaders of the next rally.
Yeah, well, some great insights to cap off your Friday. We hope you have a great weekend. But before we go, we want to remind you that it is still leaderboard free access. We just a tail end of it. Any thoughts there?
It's a great product to check out. It really, we really try and focus on sending you a lot of educational tips on there, so that you can really learn. It's not just about doing it for you. It's about really kind of teaching you how our process really and how we analyze stocks and mark up charts.
Yeah, very cool. It is free access, so make sure you go to investors.com/free access for all of the details on that. And we do have our latest episode of the Investing with IBD podcast that is out now. It just dropped yesterday, so make sure you check that out at investors.com/podcast. And you can find all of our articles at investors.com for the week ahead, IBD Weekly, all of our featured stories usually start trickling out on the web on Friday and over the weekend, so lots more insights to catch there.
Yeah, there's a good one by Juan this week on the market, so that's one to check out.
Yes, definitely. Okay, everyone, thanks so much for watching, and we'll see you right back here Monday.